Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and co-presented by their erstwhile market commentator Darren Sinden.
Good afternoon, Zach.
Should we call it the Beijing Crossover Show now, can't we?
It does seem that all roads.
It's got a better ring to it, isn't it? No?
Yeah, all roads lead to China, don't they?
Yeah.
At the moment, it's almost impossible to get away from it. In fact, I've written a whole article about that this week, actually, how interwoven China is within the global economy and our everyday lives. And
but of course, we don't know how much it should be interwoven or not, or how much in effect. Anything. So the linkage between China and the rest of the world is still something to speculate over.
Well, Churchill described Russia, didn't he, once as an enigma wrapped up inside a riddle, and I think that's an appropriate quote to use about China. No, we're completely in the dark, and we can only go with our gut feeling, I suppose.
Right. Okay. Well, we obviously ignore China on the way up. We're looking at it on the way down. I suppose that's the simple way of looking at it. But anyway, today's data.
Okay. Well, we flagged this yesterday, obviously, and it came out very early this morning. But China flash manufacturing PMI for August came in at 47.1, well below the forecast of 47.7, and further away indeed from the prior read of 47.8. Obviously, as we said yesterday, reads below 50 are considered to be contractionary, and clearly this figure that came in was the lowest for 6 years. So, the sentiment was obviously very poor, and the net result of that, China A shares, which again we talked about yesterday, the index sold off by 4.27%, so a further sharp drop in Chinese equities, and as if that weren't enough for people to contend to one of what was expected to be a sleepy Friday for the markets predominantly. We also found out that we were going to have snap elections in Greece as Alexis Tsipras resigned, basically resigning to sort of force the populace to decide if they're going to accept his concessions to Brussels or whether they'll vote for somebody else who's got a different plan.
He loves his democratic processes, doesn't he? Referendums, elections, and really is being political, let's say.
He is, yeah. I mean, he's playing a good game, calling people's bluffs and asking them, back me or sack me, I suppose, is the right tabloid phrase you'd use here. And then against those sort of negative news items, I suppose you'd call them, we had some PMI data for Europe. Services flash PMI for August came in at 54.3. That was better than the forecast of 54.0 and better than the prior reading, indeed, also 54.0. And then for the manufacturing sector, the flash PMI came in for the Eurozone at 52.4, again ahead of the forecast, which in this instance was at 52.2, and bang in line with the prior read at 52.4. That was taken very positively by things like the DAX and the Euro. I think maybe some of those markets were looking for an excuse.
That saved the situation really today, you would say?
Oh, I think it did, because if we'd had a negative read, I think it could have become very messy beyond what we saw. So I still find myself scratching my head, because although the German data was better this morning, the French was worse, and I don't see how that equates, when you add them all up, to a better read for Europe as a whole. Nonetheless, those are the figures we're left with, and that's what the market's reacted to.
Okay, let's go for the European movers.
Okay, well, we'll stay with Germany for a couple of stocks that caught my eye this morning. First of all, Deutsche Lufthansa, that's LHA in Germany, €11.20, down around €2.34, rather 2.35%, I should say. A sell note from Goldman Sachs this morning cuts their forecast, and their price target moves down to €10.50, and they say that October the 9th, when the company released traffic figures for September, it could be the downside catalyst, and the reason for that, they say, and possibly with some some authority, is that the Deutsche Lufthansa have introduced this new €16 booking fee. And I think basically
it's not very nice. It's like Ryanair or something.
Well, I mean, I guess that's telling you that's the reason that people like Ryanair actually make money. Some of the former national carriers don't. But nonetheless, it's Goldman's deciding it is one of the reasons why they might put people off travelling with Lufthansa. So they're called down. And then staying in Germany, Daimler, that's ticker DIA, €72.61, up around 1.35%, and they've held up well even when the DAX was at its very weakest today. done better through positive German PMI data, as we just discussed, but also Goldman's again flagged this one as a top pick in a screen they run about European recovery and restructuring beneficiaries. So if you buy into the longer term European growth story, then Daimler's perhaps one for you.
Right, interesting. Probably a brave thing to do at the moment.
It is, but we saw the other day, didn't we, about some of the parts valuations, BMW for instance, and the call then was that even if China sales are zero, BMW was still worth basically their current share price. And I wonder if there's some thinking similar to that in terms of Daimler.
Okay, well, let's go on to the MA rumours and movers.
We stay with transatlantic M&A, and it's not new news, but it is hopefully the concluding chapter of a story that's been running for quite some time. FedEx Corporation of the US, which is FDX, will apparently formally launch its offer for the Dutch rival TNT Express, and that's going to be launched on Monday. The terms of the deal aren't really going to change. They're going to offer around $4.8 billion or equivalent for the company. As I say, it's not new news. TNT, which is ticker TNTE in Amsterdam, trading around €7.53, down a smidge, about 0.7%. The deal's taken ages to come to this point. It's been held up by a series of EU competition or completion issues, but these are thought to have been resolved, and the TNT board has recommended the offer, which it turns out is all cash and are worth about €8. So there's maybe a small element of premium in there. And interestingly, the unions, which obviously have a role in much of European industry, are on board with the deal too. So that's good news. It's had a checkered history though. TNT it almost came to merge with UPS, obviously FedEx's big rivals, back in 2012. At that point, UPS needed to satisfy competition authorities. They were going to get FedEx, funnily enough, to buy some assets they were going to sell. But in the end, it all became too complicated for UPS. They abandoned the talks, and TNT shares plunged. One point I would just make, there is quite a high hurdle for this deal to go through. The offer requires 95% of acceptances from TNT shareholders. As I say, it is a high hurdle, but apparently one which FedEx expects to be able to achieve. So.
All right, well, let's push along to the US data points.
Okay, well, it's a very thin calendar today, but probably a very important data point in as much as PMI has been driving the moves in equities elsewhere today. So we've got a flash manufacturing PMI for August in the States. The read that we're expecting to see is 54.2. That's a little bit better than the previous read of 53.8 for July. But if we look at the chart there at the bottom, we can see that we've basically been posting lower readings since the high posted in August 14, so literally a year ago, when we posted a read of 58. So whilst we've been edging higher ever so slightly, we're hardly knocking the ball out of the park, to use an American euphemism.
Right, okay, on the US pre-market, what are we looking at?
Okay, well, we talked earlier this week, didn't we, about it being a big week for US retailers, and we've had a real mixed bag over the last 5 days. After the close last night, we heard from Ross Stores, ticker ROST. This is a sort of fashion discounter, if you like, a TJ Maxx similar type company to that. Earnings came in above forecast. They posted 63 cents of EPS versus an expectation of 62 cents. However, once again, as we see with a few retailers this week, the guidance for the second half was poor, seen as soft, and the management talked about a challenging sales and earnings environment. So the markets, again, as it always does in these situations, voted with its feet, and they're down around 9.3% at $50.10 pre-market. And then the other pick today, Brocade Communications, BRCD is the ticker there, $10.30, up just under 6%. And again, it was earnings related, the move. They posted an earnings beat, but were able to also guide slightly higher to the mid-range of analyst forecasts for the next quarter, and also showed year-on-year margins, and they were above their previous target range. So they've impressed the market, and as I say, they've been rewarded with a 6% markup. Whether that will hold in the regular session remains to be seen, of course. And then down to our cash index levels, obviously a bit of a bloodbath, as we've said. FTSE on its way to that ninth in a row
right
losing streak, and And so, to reflect that, we now look at 62.86 on the downside for FTSE, plays 63.70, 62.86 just below the low of the day for those watching.
But these support levels you come in now, they're like the opening lows. We rallied off those lows.
Yes, absolutely.
So basically, if we see them attacked later in the session, it would be it'd be that much more bearish.
Oh, absolutely, yeah. In fact, we'll come to bearish price action when we look at the American indices. And the DAX, similar story here, 10,230 on the downside. We'll need to get back above 10,432, which was we'll see in a little while, was yesterday's close. And as far as the S&P and the Dow are concerned, well, they were rubbish all day yesterday. They closed on the lows, and very ugly price action. 2,022 on the downside for the S&P, plays 2,052 to the upside. Apologies for the wide range there, but that's what the candles are telling us. Yep. And for the Dow, so a little tighter, but 16,945 on the downside, plays 17,072 to the upside.
I was complaining that the US markets were riding high above the Europeans, but it looks like they've sort of got back more into alignment now.
Yeah, they certainly have after yesterday's downward slide. As I said to you before we came on air, perhaps the most surprising move to me over the last 24 hours has been the continued strength of the euro against the dollar. It's hard to judge really how much of that's down to euro strength and how much is dollar weakness, but nonetheless, 112.43 is now our downside level, so another big figure change there in the space of 24 hours on the downside then, and 112.94 the upside level, and obviously we could see our third big figure change quite easily.
Have the 200-day average at 113.34.
Well,
so that would be quite an achievement for the euro if you got it.
You wouldn't put it past the euro. And what we, the talking yesterday afternoon around our office, and it was of the likelihood of some profit taking on Friday, but so that may be deferred now until Monday perhaps. Aussie dollar, US dollar, a bit weaker again here, 72.81 now the downside level for the Aussie, plays 73.30 to the upside. Dollar yen, and apologies, a typo there, but 122, and that's not a typo, that's the correct handle now, 122.33 now on the downside. Will play 123.10 to the upside. Just shocking to me how easily that 124 number was just swept away. Again, I think that says a lot more about the dollar probably than it does about the yen. And then in cable, probably the most pedestrian of all of our currencies at the moment, 156.65, plays 157.21. Obviously, for the bulls, to finish the week above 157 would be a positive result, but that remains to be seen if they can do that.
Right, and in focus, what are we looking at? I
thought we'd have a look at the DAX, and just wondering if it could build on this morning's bounce. So we opened today sharply lower, gapping all the way down to 10,228.7, but we filled that gap very quickly as soon as the positive PMI data came out, back up to 10,401. But what we haven't done, and I think, well, at least haven't done, as to the point I left the office, was move above yesterday's closing level of 10,432.2. So I think, before we get too excited, we need to see a move above there. In terms of other levels, I think to watch, because it could potentially continue to rally. I would say 10,593, which was yesterday's open, and the early July lows of 10,652 are key resistances. And I also think that the 200-day EMA line at 10,964 will also be in focus. Just to point out to people really that as of the close of yesterday, we were down 5.37% on the week. We're broadly flat today, so no difference from that really. But we're also still up around 6% for the year, or slightly over that. So I think it's this area here in the chart is quite pivotal and could determine what happens in terms of a year-on-year read for the DAX.
And really how seriously the market regards the China events and the Greek events.
Yeah, absolutely.
Obviously, it's still up on the year. It's not too much of a concern at this stage.
Yeah, very true. And the DAX is clearly a barometer for both Greece and China. So yeah, good point.
Okay, well, Darren Sinden, market commentator at Admiral Markets, thanks for coming in today. That's the end of the Wall Street Crossover Show. We'll be back on Monday.